And just, to talk about what we are looking for by way of support for business, this massive fiscal stimulus, we see fiscal stimulus across Europe, as you know, roughly about the same size in aggregate as we'll get in the U.S. What's the best way, sir, to help businesses weather this without bailing out businesses that shouldn't be bailed out? Is there a one-fits-all approach?
No, I think it's, of course, a multidimensional issue and a very good question. I would say first, the most effective spending on the fiscal side might be to finance partial activity, partial unemployment, partial activity, what the German calls Kurzarbeit. It proves in the former crisis very effective because it permits the firms to remain and to stand ready to restart again their business after a period of sudden stop, which is very, very damaging. And now, of course, you have a lot of other spendings that are, in my opinion, necessary. Again, the goal is to maintain the situation as much as possible and be sure that we have, in this very, very difficult situation, the capacity, again, to restart again. So the judgment is to protect all activities and entities that should be ready to restart again, because we have a very special case, obviously. And of course, it will cost money. I think that we should not be too frightened by the money we are spending today, if it is appropriately spent, of course. The problem will be that we will have to digest all those spendings afterwards, as we had to digest all the spendings after 2008, 2009. And experience has demonstrated that we were not very good in normal times to run properly the global economy as well as our national economies. And I think most of the difficulty we will have in the future would be to be sure that we have in normal times, when we are back to normal times, an appropriate handling of the economy.
Which I guess gets to a question, sir, that we may not ask yet because we're still in the middle of a crisis. But it does, because we did have the extraordinary action that you all took in 2008, and we never really normalized, and there are consequences of that. And some would say some of the consequence is we don't have the weapons in our arsenal today that we wish we had. Do you have a sort of perspective or context on, did we get normal enough? And could we really not go too far here? Is there such a thing as too much now?
Well, first of all, I fully agree on the fact that we had not the appropriate policies after the previous crisis. And I would say, very unfortunately, when you are in normal times, you think that you have plenty of time on the fiscal side as well as on the monetary side to cope with future difficulty. We see that it's not the case, frankly speaking. We are in a situation which is very difficult. It's not time in the difficulty of the situation to say we cannot do what would be necessary to avoid a Great Depression. I think we have to avoid the Great Depression. But we have to know that after we are getting out of this situation, we must be fully able to have and to run appropriate policies. It is more or less what says the Systemic Risk Council, which today is making a lot of recommendations which are addressing both, I would say, what we should have done in the past and we didn't do in the past, and also what would be an appropriate way to cope with the future when we are out of this difficulty. So, I recommend you the communique of the Systemic Risk Council.
So, Mr. Trichet, do you think that the ECB should raise or even abolish the limits on the debt it can buy? Will it do that?
I mean, they have said what is their intention as regards the long-term refinancing operation, the targeted long-term refinancing operation, which are very powerful, and the new pandemic program, which is there. And of course, this ECB has plenty of ammunition, and I'm sure that they will spend their ammunition in the best fashion possible. That being said, they can care for liquidity to be everywhere in the economy, as the Fed is doing. They could care of making credit available to the extent that they are not available in a number of directions. They cannot themselves grant subsidies. They cannot themselves, the Fed, the ECB, grant, I would say, full-fledged guarantees, state guarantees. So I think that the governments, parliaments, Congress, and so forth are stepping in and are themselves doing what the central bank cannot do. And we need both, of course.
Should,
cannot
on
substitute
the
government.
fiscal side of things, should Europe then abolish, for the moment at the very least, its guidelines on debt and how much debt a country can have?
It is already done, to my knowledge, and it was in the Stability and Growth Pact. The Stability and Growth Pact was foreseeing the possibility in exceptional circumstances to waive the limits that you know. And of course, we are in exceptional circumstances. So I would say there is nothing exceptional in the waiving of these limits. It is what is already in the Stability and Growth Pact. But it means that immediately after we are out of the crisis, we should fully respect the Stability and Growth Pact. And that is something which was not done very well in the former period of time.
What would be the best way to ensure that that is done, sir? Is there a way to enshrine the way forward, even as you, for instance, if the ECB were to move to expand its purchases even to exchange-traded funds and moving in the direction of Japan? Is there a way to pull back on some of these directions, or do they only seem to go in one direction?
No, I mean, as regards the central bank, what they are doing and what the ECB is doing is to be in a position of countering speculation. You are countering speculation when you do what you do today. Of course, the central banks and the authorities will win the game. We will win against speculation. We made a lot of money out of the program which I started myself, you know, the securities market program, SMP, in 2010, 2011. Everybody was saying, you will lose money, you will lose money. But no, because we were winning against the speculation and we made a lot of money. So I don't think that this is a major problem. The major problem I see is that we cannot be eternally in a very accommodating position, both as regards governments and as regards central banks. And it is clear that a normal period of time should be accompanied by going progressively back to a more normal situation. But today, it is clear that what has to be done must be done and is being done, I have to say quite correctly, in my opinion, by the ECB, the Fed, and the other central banks.
And you have used this term, Great Depression. What is your biggest fear about what might send us there? In other words, there's a lot of action being taken to avoid the worst of the economic effects. What needs to happen to avoid that Great Depression?
All the problem comes out of a health problem, this pandemic. What I fear the most would be that after a first wave of the pandemic, with this sudden stop of activity that we are observing, at least in Europe and perhaps in the US, and we see that in the PMI that are very, very bad and are really suggesting a sudden stop of many activities in our economy, what I fear the most would be a second wave of pandemic. And you cannot exclude that totally because we are playing at a global level. You have other countries, other continents that are not yet really touched and will be touched in the future. And this second wave of pandemic would be very, very dramatic. So my main problem is coming, I would say, from the medical standpoint. And of course, I hope very much that we will have a vaccine and very soon we will have a much better weaponry because we are without not much ammunitions today.
So, Monsieur Trichet, Italy right now is living a nightmare. Prime Minister Conte just coming out and saying that the government is introducing a fine of up to €3,000 on the lockdown. So if you violate the lockdown, you'll be fined €3,000. I don't think it's something he really needs to say to the Italian people anymore, because today there was a report of 743 deaths in Italy, higher than the last 2 days. What should Italy do in order to protect its economy? What can it do? For example, should it apply for OMT?
Well, first of all, I think really that the main problem is a medical problem. And you have to see exactly what is the best and most efficient, effective fashion to fight and win against this epidemic. Of course, I thought myself that we were a little bit out of the exponential episode of the epidemic in Italy, and we see that it's not really the case. So this is something which is really extremely, extremely alarming. I don't know any reliable study that would be convincing on the shape of the chart, of this epidemic. We will see. Europe seems more vulnerable, and I guess the US will probably be also more vulnerable than Asian countries for reasons that are very difficult to elucidate. We will see. But again, the main problem is the medical problem.
I want to ask you, sir, big picture, one of the massive outcomes of the action that you all undertook in 2008 has been this long, slow punishing of savers. And we've seen that continue with yields moving in unprecedented ways. It seems with the money that we now print, this will only continue. As you look down the road, how worried are you about just the basic citizens of the world out there who are trying to save, live on their investments into their old age?
Well, it's clearly something which we will have to reflect upon. The very low interest rates are not only to be attributed to the crisis in 08, 09, 10, 11, and so forth. It's also clearly the consequence of changes, profound changes in the economies of the advanced economies. It's also changes that are associated to phenomenon that are multidimensional and explain why the neutral interest rates seems to be very, very low, and even in certain cases, negative. So there we have something to look at after very, very carefully. And I fully accept that this is something which will have to be solved later on when we are out of this period. I hope very much that part of the solution will rely upon, one, the fact that inflation will be back to a normal behavior after all this crisis. And that, of course, would permit interest rates to be higher than their present level and their previous level, former level, when we had a very, very low level of inflation. And I expect also that productivity progress will step in a way which will look a little bit like the end of the Solow paradox, from the Professor Solow saying in the past, I see a lot of IBM mainframe, but I don't see the productivity progress. Yes. I guess that we are more or less in the same situation now. We will see at a time productivity progress that would permit the economy to grow faster and, of course, interest rates to also be higher, significantly higher.
Mr. Trichet, I want to ask you about a potentially dangerous mix out there. Obviously, with all of the actions being taken place around the world, there are huge ramifications for currencies and for the foreign exchange market. What do you see happening? Are currencies able to defend themselves against this push for dollars? I mean, you've the euro at 107.61 now, and that's, better than it was yesterday. We were headed towards parity for a while. What happens to the euro? And is there a currency or a country that gets into trouble over this?
No, I think that there is no problem, fortunately, between the dollar and the euro. The fluctuations, the volatility of the euro-dollar seems to me quite meager, and I will not dramatize at all the most recent fluctuation. I have known in the past, a very, very low, a very, very high dollar against the euro and the reverse. So no, we have no problem there, it seems to me. There might be a problem in the relationship between the dollar and a number of currencies that are in the emerging economy or in the developing economy. So there we might have a problem, and we have to look at it very, very carefully. By the way, it seems to me that the crisis at the present moment is concentrating on China and the advanced economy. And we have to look very, very carefully at what's happened in Africa, in Latin America, because maybe tomorrow we will have the main problem being in those two continents, Latin America and Africa. So I expect the IMF, the World Bank, and all the international institutions to be extraordinarily vigilant in this respect.